Hey all, welcome to the 13th episode of Business Line's thought-provoking trending commodity picks. This week, we'll let you all think over this fact, especially with regard to electrical vehicles or EVs. Recently, one of the car makers came up with a mouth-watering offer of a battery-run car. The producer offers battery as a service, which means the company will own the battery on which the vehicle runs. According to Dr. Ashok Junjunwala, who this month was honored with Business Line's Change Maker Award, the price of a vehicle's battery makes up 50% of the total cost of the car. His view is that EV batteries should be used like gas cylinders at home. This is like going to a dealer or an agent, much like the gas agency, to change the battery and pay for it. However, the problem in India is that the size of batteries is not uniform. It has to be standardized. Be that as it may, coming back to why EV manufacturers are looking at these options. This is because price of some of the key raw materials for EVs and their batteries such as lithium and cobalt have dropped sharply, barring copper. Lithium carbonate prices are currently ruling at a 3-year low. Lithium carbonate and lithium hydroxide are refined lithium products. Lithium hydroxide is obtained from lithium carbonate and is an EV battery material. The sources of lithium used in the cathodes of EVs are spodumene and subsurface brines. According to Trading Economics website, lithium carbonate is currently ruling at 72,500 Chinese yuan or $10,330 a ton. In December 2022, it had increased to a record high of 57.5 lakh yuan or 8.2 lakh dollars. According to Australia's Office of the Chief Economist, lithium prices have dropped since the second half of 2023 due to slow growth in EV sales. This resulted in growth in lithium demand falling below expectations. The high prices of 2022 led to a wave of investment in lithium production, but now it has led to overcapacity and surplus of production. Senior Australian researcher Juan C. Wang says the lithium market will face an excess supply situation in 2024 and 2025. While short-term price rebounds may occur due to peak demand seasons, long-term lithium prices are expected to correct downwards. The key risks include slower than expected electrical vehicle demand and faster than expected lithium resource production. The Trading Economics website says lithium miners and producers in China continue to expand capacity and hunt for new reserves. Global supply is expected to soar by 50% this year. On the other hand, subsidies from the Chinese government have led to a glut in EV batteries. Chile plans to double its lithium output over the next decade. China is expanding projects in Africa to secure battery metals. More pressure on lithium prices and EVs come from a 9% import duty on Tesla electrical vehicles produced in China. There are other trade barriers against China-based EV manufacturers, mainly tariffs ranging between 36.3 and 17%. The US raised its duty on Chinese EVs to 100% recently. All these have also resulted in battery prices dropping. That's why EV manufacturers are now coming up with enticing offers. What should you do? Well, take your time and analyze the situation. But certainly, this is one of the best times to closely consider buying electrical vehicles. Thank you all for tuning in. Bye until we meet in our next episode.